Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 778A, and today's date is September 29th, 2015, and the title of this episode is China and Other Leading Countries Are Discussing a Reset of the World's Financial System. Now, before I get started, I just want to make an announcement. Tomorrow, Wednesday, I'll be uploading an interview with Carl Denninger. If you're on the X22Report.com email alert systems, you will get an alert. If you signed up to the X22 Report Spotlight channel, YouTube should send you a email letting you know that this video has been uploaded. If not, you can go right over to YouTube, type in X22 Report Spotlight, and it should bring you right to the video. Or you can come over to the X22Report.com site, scroll down a little bit, move over to the right, you'll see the video right there in the sidebar. Let's get right into the economic collapse financial news. Now, as we can see today, the markets are continually fluctuating. I mean, yesterday we had this huge market that just went completely down. And today we see Asia, Europe, completely down once again. The United States government, central bankers, high-frequency plunge protection team, they did whatever they possibly could to keep this market in the green. And they did it all day long. At one time, it was just flatline for many hours. But we see the S&P only finished up about 2 points or so. NASDAQ is down. And if you notice, it is getting harder and harder to keep this system alive. Remember, once the market completely comes down, people believe that this is the start of the economic collapse. This is not the start. This is letting everyone know that the central bank, they can't control the illusion anymore. That's all this means. We've been going through the collapse. We've been tracking the collapse. I mean, today, they're still pushing the meme that we are in this fabulous recovery. They're telling us right now, and when I say they, it's the U.S. government central bankers, that for the second month in a row, U.S. consumer confidence, according to the Conference Board, soared in September, printing at 103, smashing expectations of 96.8. And this is just shy of the highs going back to August of 2007. Wait, August of 2007, what happened in 2008? That's right, the market completely collapsed. Actually, we were going through the collapse in August of 2007. This is when things really started to ramp up. But of course, nobody talked about it. And we have to remember one important thing here. The Conference Board is basically funded by the government. It's government sponsored. And what's very interesting about all of this, the UMich, which is signaling a complete opposite of the Conference Board. The Gallup poll, which is a poll of the people, is signaling a complete opposite of the Conference Board. You start to realize that they are using every type of weapon they have in their arsenal to keep this illusion alive, to keep everyone fooled of what's really going on. So back in August 2007, the Conference Board, which is sponsored by the government, was telling us that everything was fine. Moving forward through 2008, the Conference Board continually told us that everything was fine. Even the Fed came out in 2008 and said there is absolutely no recession whatsoever being forecasted at this point. We don't see anything in the future indicating that there's going to be any type of problems. And then we know what happened. So we know they lie to the people. We know they use these techniques to keep the illusion alive. And this is what they're doing. But we are seeing mass layoffs. I mean, A&P in their headquarters laying off 319 people. We understand that Deutsche, Unicredit, Heinz Corporation, HP laying off, and there's many, many others. I mean, you could just name them all here. They're laying off thousands upon thousands of people. I mean, Deutsche Bank, 23,000. Unicredit, 10,000. HP, 30,000. Microsoft, 7,800. Heinz, 2,500. And now Bank of America. Now they're saying they're going to be cutting hundreds of jobs. They don't have the final count yet. And we're going to have to watch this very closely because we're starting to see the signs, all these indicators letting us know, yeah, something bad is headed our way. We're getting the economic indicators right now. This is what happened prior to 2008, if you remember. In the summer months leading up to the big stock market crash, and let me remind everyone, during the summer month going into September, the market was fluctuating the way it is now. And then there were warnings, Bear Stearns, Lehman, things that were happening in the background that people didn't even know about, like AIG. And we're hearing this once again. We're hearing things that sound like Lehman Brothers in 2008. But this company is called Glencore, which is the largest commodities trading company of the entire planet. And at one time, it was ranked as the 10th biggest company in the world. It right now, the company is linked to trillions of dollars of derivatives, which is traded globally. And if this firm, if it were to collapse, implode on itself, it would be a complete financial disaster, unlike anything we've seen in Europe since the end of World War II. Unfortunately, all signs are pointing to an inescapable death spiral for Glencore at this point. It is completely imploding right now. But of course, everyone's trying to keep this quiet. We see Deutsche Bank, the same exact problems. But they're going to try to keep the illusion alive that everything is fine. But as we look at more and more of these economic indicators, we find that no, things are not fine. Actually, they're accelerating to the downside. U.S. retail sales in September, the chain store sales fell by 1.5%. In the first 4 weeks of September. Think about what's happening here. People are losing their jobs. They can't find the same high-paying job. A lot of people are applying for unemployment, but of course the government's not going to show that because then it will show that people are being laid off. And we have to remember back in 2013, the government got rid of that department that counts layoffs. So they don't want this information showing up everywhere. So they just ignore it. It's easier done just ignoring it. But we're starting to see that it's really starting to take its toll on the economy. And as we move into this holiday season where we normally see sales increasing, people getting in that mood that holidays are coming, we're going to be spending more, we're seeing the opposite. The market is fluctuating. Layoffs are being announced. People are nervous in their jobs because they see other people being laid off. They don't know if they're going to be next. And now, and we talked about this over and over about real estate, about how prices are coming down. Now, I mentioned this back in April, May, when I started to first notice that house prices were coming down. We moved into the summer. Summer is normally the hot season, no pun intended there, for real estate. And normally you see houses being sold left and right. But we saw existing home sales, pending home sales, completely crash. The only surge was new construction, but that didn't make any sense because lumber prices, lumber demand, home furnishing stores, home improvement stores, their sales declined. So this absolutely made no sense whatsoever. So if we didn't see it in existing, we didn't see it in pending, but people are just coming out of the woodwork to buy new construction. And right now, Case-Shiller, and this is for the 5th month in a row, home prices missed expectations and dropped by 0.2% month on month in July. The biggest drop since July of 2014. Now, remember, they're talking about July now in the news. We're in the end of September going into October. So they're a little bit behind the times here, and they're starting to show us that, yeah, prices are starting to level off and come down now. Well, now at this point, moving into October, prices are way down. Houses are on the market longer and longer. And we're seeing that prices have hit a plateau, and this was back really in May, and they've been coming down ever since. What does that tell us? It tells us that the real estate market is coming apart, that people can't sell their homes. A lot of people are still living in that fantasy that everything is okay and we're going to put our house up for the highest price because they're listening to the corporate media, and they don't understand why the house isn't being sold or why they had to come down in price to get it sold. And this is how it begins, and it's starting to spread now. So Case-Shiller reported earlier that the prices are a little bit weaker than they expected, and the 20-city composite index posted its third monthly decline in a row. And when we look at this, we see now 10 cities where prices are falling. Los Angeles, Seattle, Charlotte, Tampa, Atlanta, Washington, Miami, New York, Minneapolis, Detroit, Chicago. It's starting to spread around the country, and it will continue. Remember, they're going back to July to tell us what is happening. We're moving into October right now. So what that tells us is we are in an accelerated housing decline. And it is getting worse. When I looked around the country now, it is much worse than it was in July. We've just come out of that great season of real estate, and now things are really starting to pick up and fall apart. And it's getting worse, not getting better. But of course, the corporate media is continually spinning this to make it seem like everything is fine. Now, we understand back in the crisis of 2008 going forward, people were underwater in their mortgages. People had problems paying off their mortgages. And the government launched a fabulous program to help the mortgage crisis, to help struggling homeowners. But really it was really there to help the banks and hedge funds, and really not Americans who were in danger of losing their house. A lot of Americans had a very tough time even using the programs. So 5 years ago, the Department of Housing and Urban Development launched a mortgage sales program called Distressed Asset Stabilization Program, DASP. So it could unloan teetering mortgages to the private sector. DASP was supposed to not only help HUD improve its finances, but also assist homeowners facing the risk of foreclosure. And they were supposed to work out new terms with the banks and help them out. A lot of people, it just never worked out. And it hasn't worked out for the majority of homeowners. DASP has resulted in more than 98,000 mortgages, representing more than $16.7 billion in total debt being sold to investors. So, of these mortgages that were sold, guess what? 83% of them foreclosed between 2010 and 2014. It didn't help at all. It was a complete disaster. But of course, the government doesn't put these things in place to help the people. It puts it in place to help the corporations, to help the hedge funds. Because we have to remember, when you're in a fascist country, the first objective is to help the bank and the corporations, not the people. And we see this time and time again, and this is definitely what's happening. Now, we understand the government is continually taking on debt, but the U.S. national debt clock is still frozen in time. So when people look at it, they think, oh, look, we're not taking on debt anymore. But we are. All they did was freeze it. It's been frozen for 21 days. Frozen at $18 trillion and change. That just happens to be the official debt limit set by Congress. And it's about $25 million below the current legal debt limit. So basically they just stopped it and said, everything is fine. Look the other way. But we're hearing from other financial experts that things are not going well whatsoever. Carl Icahn, he laid out his concerns here. Low rates, asset bubbles, it's going to be a complete disaster. Fed policy in the wake of the dot-com collapse helped fuel the housing bubble and give what we know about the monetary policy is affecting the financial cycle. We might fairly say the Fed has become the bubble blower extraordinaire, he says. Herding behavior, he says. The quest for yield is pushing investors into risk in a frantic hunt for yield in an environment where risk-free assets yield at best an inflation-adjusted zero and at worst negative. Companies are putting out fake earnings. Companies are being deceptive about their bottom lines. Well, we know this. Look at the stock market. The stock market is supposed to be based on corporations and their earnings, revenue, and we're starting to see that these companies have no revenue. These companies' earnings are down. They're laying off people. They don't have the sales. But the stock market was continually pushed up. Alex Merck warns ZERP is bad for everyone, and it may lead to war. ZERP is bad for business, bad for investors, and bad for Main Street. It's bad all around. We know this. The reason why they're keeping everything at zero is to keep these bubbles inflated, to keep the debt under control. Because think about it. If they raised interest rates just a little bit, say 25 basis points, no, that won't hurt the economy. It might hurt small portions of it, might hurt the stock market a little bit. But they can say that everything is fine. If they actually increase the interest rates to where they're supposed to be, where normal interest rates are, let's say 2%, that's below where they normally are, that would destroy the economy because it would throw all those people who are looking to purchase a home completely out of the market. Houses would be way too expensive. Automobile loans, it would throw a lot of people out of the market. Couldn't get them because their payments would go up. Student loans, people would think twice because, I don't know if I want to pay that much in interest. And if they raise it even more, it would be even worse. Now, China, we understand, is continually accumulating gold. We understand they wanted to include their yuan renminbi in the reserve status in the IMF. United States government central bankers put a lot of pressure on the IMF not to accept China into the basket. And they said they'll be looking at this next year in 2016. Well, we're getting reports, and this is coming from Will M. Middlecoop, saying that there's new confirmation that China is discussing a reset of world financial system with other leading countries, just like it was done during Bretton Woods after World War II. And this was 1944. In an OMF-IF publication, the second highest ranking Chinese banker within the IMF stated the topics currently discussed among the leading countries are not significantly different from those debated at the Bretton Woods conference. Those who open up and learn from the dusty archives of Bretton Woods may perhaps gain insights into many other issues relevant today. So what are they doing? China right now is talking to these countries, and they're looking to be the next world leader. And this will not include the United States government central bankers, just like during Bretton Woods, where the dollar and the U.S. became the world leader. We have to remember, China has been accumulating gold. China has the manufacturing. Yes, are they swept up in the private Western Central Bank system right now where things really look bad? Of course they do. I don't think they really care at this point, because the country that has the gold, just like back in 1944, back in World War I in 1913 or whatever the year was, going back even further than that, the country that had the gold was the winner. Today, the country that has the gold and the manufacturing will be the winner. And they're already discussing this. So it's just a matter of time, because they know that this system right now that we're in, the dollar, which has been going for 40 plus years, it's dying. The amount of debt spread around the world, the U.S. government central bankers losing control of the Middle East, continually having to go into more and more countries to prop up the system, it's failing. Countries know this. Russia is calling out the United States right now. And we can see that things are starting to basically crack and fall apart. Obamacare was put into place to try to boost the system with tax revenue by propping up corporations. This wasn't really a benefit for the people, because really, what did you get from it? Wasn't low-cost insurance. Actually, the cost is much higher. It's actually almost double what he promised. And all they did was have the insurance companies, the government, sit together and said, how can we trick the American people to think we're giving them a benefit? I know. We'll all come together. We'll set a level premium. We'll say, yeah, anybody can come in, because we're going to set the premium higher. And everyone has to accept it. Well, that's going to be a problem. How are we going to get everyone accepted? I know. Penalize them if they don't, because we need everyone in paying these higher premiums. And once we have everyone into the system, there's no more competition. We can raise these premiums however we want. And with these plans, we can give them high deductibles. So this way, we don't have to pay out that much. So what did they really give us? Nothing. Absolutely nothing. You could have gotten this on your own. So right now we see Obamacare. He needs 22 million more people in the system, or the system falls apart. They're trying to make these 8 million illegals citizens so they can bring them into Obamacare. But we see now the largest co-op just collapsed. This is the fourth one right now. New York State and federal regulators ordered the U.S. largest nonprofit health insurance provider, which was established under the Affordable Care Act, to shut its doors. So 200,000 people, their coverage will be disrupted. The Health Republic Insurance of New York received more than $265 million in taxpayer-funded loans. So we don't know what's going to happen right now, but this entire system just completely fell apart, and it's spreading to others. Remember, this is not for the people. It never was. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.